Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the CEO, Adam Sullivan of CORZ Scientific. We've got a lot to go through on the agenda today, including Q1 earnings, an update on their HPC AI endeavors, a debt repayment update, and their growth outlook for the remainder of 2024. Now, before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. Anthony loves it, and it's helping to get this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below what you thought about CORZ Scientific's Q1 results, if you're currently holding shares, and how you think they stack up to the other miners in this space. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got the CEO of CORZ Scientific, Adam Sullivan, back on the program. CORZ just came out with their earnings. A lot to go through in today's discussion. In addition to earnings, we also want to get an update on their debt repayment, their HPC program, and growth outlook for the year. So we've invited Anthony Power, our resident analyst, and Adam. Thanks so much for being here today, you guys. A lot to go through.
Thanks for having me on. Great to be here.
Excellent. So we'll get right into it, Adam. Share price is looking really good this morning. Obviously, a lot of people are happy with their earnings. We'll get into that in a second. But because it's been a couple months since our last visit, do you mind just giving kind of a quick elevator pitch in terms of what CORZ Scientific's all about?
Yeah, of course. So CORZ Scientific, we're the largest owner of infrastructure for the Bitcoin mining industry. We currently operate 745 megawatts across 5 states. And we've been the largest Bitcoin miner since 2021. So we've mined more Bitcoin than any other publicly traded mining company, including this past quarter in Q1 of 2024.
Yeah, the consistency is one thing Anthony and I continue to bring up with CORZ Scientific. Over the last years, continuing to be in first place month after month, putting out those updates. So let's get into some of that production results and the earnings here. Anthony, do you want to kick us off with the financials?
Obviously, stellar performance in Q1 with a great net income. Do you want to talk us through some of the highlights from your side, Adam?
Yeah, of course. So, I think to start off, the top line number, 179 million, 150 million of that came from the self-mining business, so mining for our own account. 29 million came from our hosting business, posting strong margins in both self-mining and hosting. And so that's 46 and 32% respectively. So we're really happy with the quarter, mining 2,825 Bitcoin. All of these metrics that we're posting in Q1, just show how much of a strong operator we are, how good we are at operating, not just the newest generation equipment to mine more Bitcoin than other people, but, we had less exahash online than many of our peers, and we're still able to get better results. And so that's something that we're really proud of.
Yeah, with the sort of like additional income that you received in terms of the Bitcoin price for the period for that quarter, it rising from like 42,000 up to 70,000. I know you sell your Bitcoin on a regular basis, so you actually made good use of that revenue there. Did it enable you to do more things than you'd originally planned for maybe at the start of the year?
It definitely allowed us to put additional cash on balance sheet. I think that's the highlight there. The one thing I'd like to point out, though, is in our business plan, we already had a plan to actually pay down about 19 million in debt and the $1 million associated with the growth at our Denton, Texas location. So we're bringing online 72 megawatts over the course of Q2. So we're able to actually grow our footprint. This will bring us to a total of over 800 megawatts operational. And so that's something that we're really excited about. The great first quarter, putting cash on balance sheet, paying down debt, continuing to grow, installing new S21 machines, and it allows us to be a lot more flexible going to this post-halving environment. We've seen machine pricing already come down from pre-halving to post-halving. Now, there was a little bit of a time period where I think machine pricing, it was a little bit, people are trying to sell machines a little bit higher immediately post-halving because the runes launch and people were saying transaction fees might last forever. And so from our perspective, we're going to be able to be very nimble and flexible over the course of the rest of this year, acquire additional machines, not only to fill out new capacity that we bring online, but also refresh our existing miner fleet.
So in terms of, great that you highlight machine prices there. Are you actually seeing, opportunity now with the amount of global hash rate coming off that, machine prices are being beneficial post the halving then?
Yeah, so I mean, we'll start with S21s. We'll start with everything prior to S21s. S21s we've already seen come down about $3 to $4, and so what we're seeing today is somewhere between $17 to $19 in terms of pricing on large machine orders, depending on when the delivery schedule is. So it's hot on the higher end of the range for a more immediate delivery. But the S19 XP, so anything really 21 joules per terahash or later, those prices really cratered post-halving. And when you think about the efficiency between an S21 and an S19, not a significant difference. And so there's a lot of opportunities kind of playing in that T-1 generation area where you can actually get price per dollars per terahash much, much lower and achieve a much better ROI. And so it's interesting to see kind of this whole dynamic unfold in this post-halving world. Maybe it's an expectation of a newer machine after the S21, coming out at the end of the year. But from where we stand right now, the XPs represent a very interesting investment thesis. Even the S21s are still represent a very interesting investment thesis. But I mean, where we're seeing, yes, we had a nearly 6% difficulty adjustment happen this morning, but I mean, there's going to be more pain over the course of this year for a number of different miners. And so we're expecting to see machine pricing still come down, bit by bit over the course of this year. And so we're going to be very thoughtful and pick our spots in terms of when we're going to pick up machines.
Have you had the opportunity to test all the sort of like the latest machines out there before you even place the order, or is it a case of, you have to take the order and take your chance? I mean, we know some miners, especially with the XPs, have had difficulties with some of the batches that came out, and they're looking to replace large amounts of machines that have not been working effectively at the Rockdale facility in Texas for Riot. Do you get to test? Do you get to test all these machines in beforehand?
Yeah, we're a very large partner to a number of different mining manufacturers, and so we're able to get all types of machines into our facility well before those machines come out for sale. And so we're able to test them. We break them, we burn them, we do everything that you could possibly imagine to them. We shake them, hit them with rubber hammers. We're trying to figure out how much can these withstand, right? Because that's like really the big question. Like, do they light on fire if they get above 120 degrees? Like, what actually happens? And so we're able to actually perform all those tests before we place orders. That's saved us over the course of the life of this company, because we recognize, there have been models in the past that have not turned out well. You go back to certain models, whether it's Bitmain, MicroBT, whatever the manufacturer, everyone's had a hiccup with at least one of their models. And so a small purchase order for us, 10,000 machines doesn't really move the dial in terms of given our broader machine fleet. And so when you think about small machine orders, that's actually a lot of machines if you have an issue with an order of that size. And so we're very thoughtful about that process. We have a whole R&D facility that we test all our machines in. We really put them through the ringer. And so we haven't had any issues with the XPs. We know that there were some discussions in the public with some other companies having issues, but they performed extraordinarily well in our facilities.
Not flammable, yeah. Adam? Didn't get her
first
to light up or what? Okay. Hey, I just wanted to go on to the debt topic for a second. So Anthony mentioned the favorable Bitcoin environment, obviously leading to more cash on the balance sheet, giving you guys more financial flexibility. We saw that $19 million pay down. How are you feeling about the debt situation at this point and the payback schedule based on kind of the timelines we talked about last time?
Yeah, let's break down that 19 million. So that 19 million was related to mechanics liens on the Denton facility. So we paid that off, and it really unlocked the next really phase of growth at Denton. And so you see that it was only $1 million to actually finish buildings A and B at our Denton location, bringing on another 72 megawatts. And so, that also helps us with the rest of the build out at our Denton campus. That Denton campus can go up to about 300 megawatts of power. And so it gives us a significant opportunity to continue that build out. And so that's something that we're really excited about going forward the rest of this year. The way we're thinking about this is right now it's more accretive for us to utilize free cash flow and cash on balance sheet to continue to invest in growth. And so that's really where our focus is going to be the rest of the year. And, we're very comfortable with that. We believe we're going to be generating a significant amount of cash over the rest of this year. And if we can continue to push and execute on our business plan, we think shareholders will reward us for this. And we have a capital structure that is essentially share price denominated, right? If we perform well, we have an opportunity to actually escape the capital structure and move into almost an entirely equity-based capital structure. So from our perspective, we're really focused on executing, really focused on growth, and really focused on being very strong capital allocators.
It's a win-win for both, shareholders and the company, because, like you say, it's structured in such a way that when the share price gets certain limits, then things can be actioned, and like you say, the debt repayments can get paid. Just a quick one on Denton. Obviously, a Texas site there. Is there a trade-off in Texas with regards to utilization, so uptime, and then obviously the fact that you benefit from a lower cost energy perspective compared to other states, maybe?
Yeah, I would say the optionality in Texas is interesting. So I think, Denton is obviously an interesting part of our Texas strategy, but I want to talk about Project Phoenix. So that's our project out in our Cottonwood facility. And this is a great illustration of the flexibility that ERCOT provides. So we set aside a separate meter in our Texas location to actually deploy 34 joule per terahash machines and actually run them at a much lower uptime than you could see at many of our other sites. But we can operate them profitably and actually make more dollars per terahash than we would if we went out and sold them in the market. And it provides us optionality where if hash price increases, we can turn them up onto different settings. We can overclock them. We can do a lot of things. And the flexibility that being an ERCOT provides is you can essentially choose what power price is most optimal to maximize profitability. And they essentially tell you what your uptime is going to be, right? And so that's a really interesting opportunity for us. At our Denton location, very high hash rate utilizations out of that facility. Even with some incremental intermittency, we still achieve very high hash rate utilization at those sites. We're hosting a number of, I would say, newer generation equipment at those facilities. And it's because they're achieving very high uptimes, very strong performance, and utilizing our facility design. We can operate in Texas using forced air cooling in a way that achieves numbers that most people would expect to see out of an immersion facility or someplace out in Iceland or something like that. So it's a facility that we're really proud of, and we're excited to continue to build out there.
Hey, just a couple follow-ups here. I wanted to talk about Denton too, Anthony. You read my mind. So just to confirm, so the Phoenix location, you've actually got some of the older, less efficient fleet, but because of the ERCOT pricing, you're able to just essentially tell them when to turn those machines on at what price to be economical, eh, Adam?
That's exactly right.
Is that common in the industry? I haven't heard anyone else really going about it like that.
No, I mean, I think it's when you look at our fleet of facilities, it's the long-term vision for what mining is going to look like. You're going to have very high uptime facilities where you're going to have, let's call it a little bit higher power cost, still competitive, where you're going to be placing your newest generation machines. And then over time, they're going to work their way down through your facility base. And so you need to have that full spread of power costs and uptime. And then, kind of the final stage of life for those machines is in a location where it's, it might be 30% uptime, might be 70% uptime, whatever it might be, to maintain profitability and elongate the profitable life of that machine.
Yeah, very interesting. Now, I asked Anthony about this one earlier, and I wanted to get your take as well, Adam. You also, in addition to the 210 million of net income, in that same bullet point, it mentioned that you extinguished a prior obligation of 143.8 million. Can you talk to us a little bit about that point?
Yeah, so there's some bankruptcy cleanup with accounting treatments of certain debt. So we actually reduced our debt coming out of our Chapter 11 process by about $390 million. That's something that, not only freed up our balance sheet, but also pushed out a lot of the maturities in our capital structure. So we really have a 3-year period here, very limited maturities, very little interest payments. And so that's something that we're really excited about. We have optionality built into our capital structure, and we have time built into our capital structure. And so we have time to execute on our business plan, show to the market how strong of an operator we are and how good we can execute. And so, yes, there's some cleanup that was done on the accounting side related to the extinguishment of debt, related to some of the valuation of the warrants and the contingent value rights that are out there. But from an overall perspective, I would say, Q2 starts as our first extremely clean quarter, because Q1 was our first quarter coming out of our restructuring process.
Okay, and then last one, and I promise I'll let you go, Anthony. What was interesting to both of us is last time we chatted, Adam, you said part of the Chapter 11 emergence process was you were mandated to sell Bitcoin on a regular basis. And then we saw that Denton expansion announcement, and Anthony and I were both quite excited because we said, hey, they're actually able to expand and grow and put this money back into the business rather than debt. So I just wanted to clarify, you said your focal point now is you don't have a lot of debt repayment interest. You want to grow with the business, obviously invest in these new facilities. Are you still mandated to sell daily? And is there any restriction on what you do with that money once you sell, or are you able to funnel it as you see into the business?
Yeah, so just to clarify, we're only allowed to hold Bitcoin up to 10 days. So up to 10 days of production. Okay. And we're allowed, once we convert that into cash, our optionality is open in terms of what we can spend that capital on. So whether it's continued growth in infrastructure, continued growth in machines, or continue to invest in our emerging HPC business.
So just one of the generic rules for coming out of Chapter 11, I suppose, was it for those rules to be set aside for you there?
Yeah.
You talked about the hosting being profitable. I mean, we've in this sort of space over 3 years, we've seen a number of miners who tried the hosting, failed at it. Jason articulated they've managed now to sort of literally get rid of their hosting business. But it sounds, from your position, that's something that it's adding good value to the company.
The hosting business that provides a strong ROI on infrastructure, and so we've always used it as a way to either deepen strategic relationships with industry players, which you've seen throughout the life cycle of our business. We've hosted companies such as Bitmain in our facilities, and we also use it as a financial tool for us. So last May, we announced multiple proceed sharing arrangements. And so we've seen proceed sharing arrangements be very profitable for the company, allowing us to partake in the upside of Bitcoin and hash price without having to buy the machines ourselves. And so our hosting business has been extraordinarily strong. It takes very strong operators to be able to execute well on a hosting business. And you also have to be very financially diligent about what costs, et cetera, are going into that business. But from our perspective, our operations are extraordinarily strong. We're constantly working through making sure we're the most efficient from an operations perspective. And so, we feel very comfortable with our hosting business. We're actually growing our hosting business, however, into HPC. But the hosting segment, is not a bad business if you can actually be a strong operator.
Do you have other contracts? And I don't need to know that comes out hosting. I mean, you've already articulated like Bitmain, but are they sort of like long-term contracts, or are they sort of flexible that give you the opportunity, should you decide to sort of give you that switch to self-mining if that becomes really more profitable business to run at the time?
I'd call them more short to medium dated contracts. And so it definitely provides us flexibility. As contracts roll off, we have the opportunity to actually backfill that infrastructure with our own machines if we would like to do it at that time.
And last time, Adam, you said you guys were fairly selective with when those contracts would expire. I think you said you had quite a few expiring around halving, just to kind of see how the landscape looked, hey?
Yeah, I mean, we want flexibility, right? I mean, we think there's going to be a lot of opportunities here coming up over the course of this year to buy machines at potentially depressed prices. Making counter-cyclical investments in this industry has always proven to be the best time to buy machines and deploy capital. There's going to be a pain trade at some point over the course of this year where there's going to be a number of miners that are facing challenges. We've put enough cash on balance sheet. We're generating a significant amount of cash flow. We're going to have an opportunity to actually be very accretive over the course of this year, acquiring new equipment to fill out our infrastructure.
We just moved away from the self-mining, and this is something it's an area that I've been impressed with. A lot of the miners moving into the HPC space, and you've now obviously got this agreement with CoreWeave for a significant revenue stream. Can you tell us a little bit more about that? And you're probably the only one of the biggest miners to go into this space. Whereas a lot of the sort of the tier 2, tier 3 miners are already sort of actively trying to get clients, and a few of them have landed some reasonable clients. But you came out with one here with a significant revenue. Can you tell us more about that?
Yeah, of course. So we've always approached our business as a platform for finding low cost, abundant power, and always applying that to the highest value use case. You kind of saw that when we were hosting business initially when we first started. Then we became a self-miner and a hosting business. We actually hosted a significant number of GPUs throughout the life of our company. When we began the process, I would say back in 2023, evaluating potential opportunities in the HPC side, given the strong demand, right now you have Bank of America, you have Goldman Sachs, you have Morgan Stanley, all saying that data centers are going to double in terms of megawatt capacity in the next 6 years. Those are very strong numbers. And a lot of our sites are sites that are very conducive to actually changing over to HPC. If you look at our facilities, they look like many of the data centers that have been built over the course of the past 20 years. We just took a data center first approach and retrofitted them to fit machines in. And so we have a much easier retrofit process to actually bring it up to the level that would be necessary to host this HPC equipment. And for CoreWeave, for example, the 16 megawatt deal that we signed at our Austin facility, that was a deal where CoreWeave was very interested in a short-term contract, or not short-term, but a contract that they could execute on very quickly. So essentially get machines online much more quickly than you could do in the broader market. So that's why Austin was really attractive to us and them. So we were able to bring 16 megawatts online. We brought it online 30 days ahead of schedule. We signed and executed on that contract within 90 days of emerging. So really strong results out of that. And then our go-forward plan here, 500 megawatts that we've identified inside our portfolio, not only from what we've identified, but working with potential clients as well about what would fit their needs. And so we gave pretty good, I would say, ranges in terms of how we're thinking about this business during our earnings call. And it's a business that we're really excited about. It'll bring long-term, stable, free cash flow to the business that we think stabilizes the growth of our Bitcoin mining business as well. So being able to grow not only with existing sites, but also finding new sites as well.
In terms of what Core Scientific brings to the table, is it obviously the power and the facility to host the GPUs? It's
also the experience of designing the infrastructure for it.
You're not putting your customers bringing their own GPUs into the facility. I'm assuming.
Yeah, exactly. We're taking this from a digital infrastructure first perspective.
Yeah, I'm just in my own head. I'm trying to do the math with 16 megawatts, and that is an absolute enormous amount of HPC power. I think Bit Digital's 50 million annualized contract is about 3 megawatts. So that's a significant size. But what they've done is they've leased their own GPUs and the leased facilities. So it's a slightly different model to what you're doing. You're providing everything except the GPUs themselves.
Yeah, a good kind of headline number to think about. Those GPUs are costing folks between $25 and $30 million a megawatt.
Yeah,
so pretty significant amount.
And you want the return on that. But in a way, I'm quite positive about miners in the space looking for these alternative, attractive revenues, because there's no correlation to Bitcoin price. Bitcoin price might be down 2 or 3% a day, but your contract for those revenues doesn't change. It's in the contract, so you'll get paid irrelevant. You're providing that service, and it's nice to have something that's more guaranteed, because let's be honest, the Bitcoin mining, it's not for the faint-hearted. It's a volatile industry, and although this next 12, 18 months might be green, we know that from track record, there's going to be some sort of challenging times as well going forward.
We go through cycles every year in Bitcoin mining. You got to be able to stand the ups and downs.
Yeah, absolutely.
Definitely, as we're learning. Now, Adam, my question for you, hearing all these different components of the business, I keep going back to consistency. For 3 years, you guys have essentially mined the same amount of Bitcoin month over month. You're the only large-scale miner that's ventured into the HPC section. You're the only one who seems to have figured out the hosting. Plus, you've got all this financial, concern in the company, or the Chapter 11 emergence, all that taking up your energy. How does Core Scientific manage to stay so consistent and so on top of their game in all these different divisions, where we've seen other miners stumble or have trouble just with 1 or 2 of these fields?
Yeah, it really comes down to the platform that we built. So the assets that we've developed over the course of the past 7 years, extraordinarily strong assets. We work really closely with the community, the utilities, so we're able to resolve any issues before they're issues. The other part is the team that we've developed. I mean, we ported over on the operation side a team from the traditional data center world to actually run Bitcoin mining operations. And so from that perspective, we've been able to be extraordinarily strong on hash rate utilization. Deploying machines has been, it's an easy point for us. And a lot of other companies struggle with that. And we've really brought together a world-class team to operate this business, and it allows us to be very flexible in terms of what we're executing on. So whether it's hosting, whether it's self-mining, or whether it's growing into this HPC world, where we've taken one of the top data center teams in the industry and given them the experience of operating Bitcoin mining facilities and the rapid growth, and I would say the constant design improvements that are necessary in Bitcoin mining, given machine types are changing so quickly, giving them that experience, it's made our entire company just an absolutely rock star team. And so that's why you're seeing these really strong results quarter over quarter. And it just goes to show, like, if you actually are strong operators, you can run this business very well.
Absolutely. Just switching across to sort of the landscape at the moment, and if you look at sort of like market capitalizations, there seems to be sort of like a gap forming now into sort of those companies that have the ability to grow, and I obviously include CORZ Scientific well in that group, and sort of like there's a sort of half the group of the public miners are sort of where they're struggling in terms of being able to raise capital. I mean, we know the debt's a challenge at the moment. It affected so many companies previously, and yourselves included. So that side of that lever doesn't seem to be as ready available or wanted to be taken up. What do you see in terms of do you spend how much of your days discussing potential M&A activity in the space? We've had a number of CEOs, and some of them have suggested a significant amount of times being invested in their time invested in looking through some of these M&A activities. Is that the same for you guys or not?
Yeah, I would say there are definitely companies in this industry that need to do M&A, whether to actually build an actual team around their company or resolve serious issues that they have, such as like not having infrastructure for like all the machines that they purchase for this year and next year, right? Like those are massive problems. Like certain companies need to find between 500 and 750 megawatts. That's a big issue. So absolutely, they need to be spending all of their time trying to find infrastructure that can actually support their business. For us right now, the way we're thinking about it, we have an extraordinarily strong team. What we're looking for now is additional opportunities on the infrastructure side, whether it be greenfield sites, whether that be infrastructure that is more bespoke. But we've had site development team for 7 years. And so we have a very strong pipeline that we're continuously evaluating. I wouldn't say it's a major part of my time in terms of how we're thinking about the growth of this business, but we're going to continuously find and plant more seeds to find, I would say, more bespoke infrastructure where we can add value. But from our perspective, we don't need to do any really large scale M&A in order to achieve our business goals for this year and next.
Yeah, we've really heard from a lot of companies, Adam, that having it all in one location or multiple sites where you can build out is just so beneficial. Not having to source new contractors and find talent and work and logistics and all the rest. And it seems like you guys are in a pretty sweet spot for that based on your outlook this year. It's mostly just finding the machines, I guess, at distressed prices.
Yeah, and that's probably one of the most easiest things to execute on. And so pretty easy sailing throughout the rest of this year for executing our business plan on the Bitcoin mining side.
Might be time for a vacation for you, Adam, with all you got her on cruise control here. No, question for you now. Looking forward, obviously Q1 was a very eventful quarter. Bitcoin price was looking really good. Moving forward out into subsequent quarters, what can we watch for in terms of catalysts, and how do you view the remainder of the year kind of coming into place for you, Adam and team at CORZ?
Yeah, I would say, things that we're focused on, Q2, finishing out our Denton location. Being able to energize that, we'll be able to bring additional exahash online. Just bringing that capacity online is really exciting for us. It brings the site up to nearly 200 megawatts. So that's, I'd say that's kind of catalyst number one, something that we expect to see, upcoming here in Q2. Throughout the rest of this year, we're hopeful. We talked a significant amount about our HPC business. Hope to be able to update the market over the course of this year in terms of our future plans. Discussing 500 megawatts of potential HPC conversion would put us into the top 10 data center companies in the United States. And so obviously that's a significant potential development that we've been working on as a company, but that's something that we're really excited about. It will allow us to continue to grow our exahash, but also grow out a very large and steady cash flow business. And so I'd say, those are the two major points as we continue to also refresh our machine fleet and add exahash. I think, those three areas, we're looking forward to being able to update the market on.
Great. And I'm just thinking as we're talking here, Adam, the last one we wanted to know about now that we're through the halving, post-halving cost per coin compared to pre-halving. Are you seeing things come in line as expected here?
Yeah, so I think an important way for people to think about this is, so on a cost per Bitcoin basis, holding all variables constant, so holding network difficulty constant, holding Bitcoin price constant, your cost per Bitcoin does double. However, your hash cost does not double. So if you're comparing hash price to hash cost, your hash cost actually stays the same because your cost structures spread over the course of all of the terahash that you have online. Now, on the price per Bitcoin or the cost per Bitcoin, we came in at about 18,900 in terms of what our cash cost was. What we're expecting is to see a little bit less than a doubling of that. So, somewhere around, 35,000 or less, potentially, depending on the difficulty adjustments that we're seeing. And so that's something that we're really proud of, something that we'll be able to bring down over the course of time as we work towards lower joule per terahash efficiencies. And so, kind of all these variables together hopefully bring us into a place where we're not actually doubling our cost per Bitcoin.
Makes sense. Yeah, and we're through the list from the subscribers. So Anthony, I'll kick it back to you for any closing thoughts here. Adam, excellent discussion today. Congrats on a very strong quarter and obviously that debt repayment progress that we keep asking about. So really strong numbers here. Anthony, any closing thoughts from you?
I mean, I think we've covered the fact that when we talk about Core Scientific, we literally, from an operational point of view, we talk about consistency. I mean, mine the most Bitcoin in the previous 3 years, mine the most Bitcoin in quarter one. We're eclipsed by Marathon Digital in April. But I mean, bear in mind, Marathon have got about nearly 10 exahash more machines available should the power be switched on for those. So, there was an expectation, from December that they would jump ahead, but it's just really consistent operations. And the fact that, now you've also entered into looking at the additional revenues from the HPC side of things. It's a really positive outlook, and it's great that you're getting the recognition. I mean, the share price obviously is where it is, but from a value perspective at the moment, if you look at the valuation for Core Scientific compared to its peer miners in terms of value per terahash, it's quite favourable.
Well, there you have it, Adam. A fairly clean report card for Q1 from the Power Mining team. So we'll kick it to you for any closing thoughts. We appreciate your time. Guys, if you're still watching, hit the like button. Feel free to subscribe. Let us know in the comments if you're holding Core Scientific and your thoughts on the Q1 results. Adam, I'll pass you the mic to close things up here.
Yeah, I'd just like to close out by saying, we're really excited about our Bitcoin mine business and our emerging HPC business. We have a very exciting 2024 ahead of us. We have progress showing in Q2, bringing our Denton facility online, paying down debt, and we're looking to refresh machines and expand our exahash over the course of this year. So it should be a very strong 2024 for Core Scientific.
We're looking forward to it. There you have it, folks. Q1 from Core Scientific. Adam, thanks so much. We'll see you soon.
Thanks also.